everyone. Welcome back to India Business Insights. We are back with an update on India's economy. Stay tuned to find out more. Before we move ahead, if you like our content, do like and share our video and subscribe to our channel. Hit the bell icon to receive notifications about our latest uploads. Let us now focus on India's economic performance. Impact of a tightening global monetary policy cycle, slowing global growth, and elevated commodity prices will mean that the Indian economy will experience lower growth in the 2022-23 financial year compared to 2021-22. The National Statistical Office, NSO, recently released the first advance estimates of national income for 2022-23. Real GDP for the current fiscal year is estimated at Rs 157.60 lakh crore with an estimated growth rate of 7% as compared to 8.7% last year. This is in line with the World Bank's revised GDP growth forecast of 6.9%. However, these are early projections and may undergo revisions later. Indian rupee ended 2022 as the worst performing emerging Asian currency with a fall of 10.2% to finish the year at 88.72 against the US dollar. In 2021, rupee ended at 74.33. Rupee was also a victim of a rally in oil prices sparked by the Russia-Ukraine conflict, which pushed India's current account deficit to a record high in September quarter in absolute terms. As on 30th December 2022, India's foreign exchange reserves stood at $562.8 billion, having declined by $70.7 billion in a year on account of valuation loss due to the US dollar's consistent appreciation against major currencies in 2022 and the RBI using the reserves to cushion the currency and the impact of FPI outflows. Net FDI for the April to October period for the current fiscal year amounted to $22.7 billion, an improvement from the $21.2 billion in the corresponding period last year. December saw net FDI inflows of 9,170 crore rupees. Though this was the second consecutive month of positive results, it was not enough to counter the unfavorable trend of the previous months. The current fiscal year has seen net FPI outflows. India's total exports for the April to November 2022 period amounted to $499.67 billion, an increase of around $75 billion over the equivalent period in the previous fiscal year. However, imports registered a much steeper increase of $139 billion and stood at $610.70 billion at the end of November 2022. The trade surplus in services was overpowered by the large negative balance in merchandise trade, and the overall trade deficit widened to $111.02 billion. The latest data from RBI showed that the current account deficit at the end of the first half of the current financial year stood at $54.5 billion, which is 3.3% of GDP, a sharp rise from 0.2% in the corresponding period last year. Index of Industrial Production, or IIP, slumped to a 26-month low when it declined by 4% in October on the back of 5.6% contraction in manufacturing, which accounts for 77.6% of the index. However, the cumulative index for the April to October period showed a year-on-year growth of 5.3%, a positive sign. The S&P Global India Manufacturing PMI climbed to 57.8 in December 2022 from 55.7 in the prior month, its highest level since October 2022, and marked the 18th straight month of expansion. Output growth hit a 13-month high. New orders rose the most since February 2021, and buying levels grew at the strongest pace since May 2020. Cost pressures were muted, with the rate of inflation being the second slowest since September 2020. On the other hand, selling price inflation outpaced that seen for input costs for the first time in nearly 2.5 years. Finally, sentiment was upbeat due to growth prospects that were supported by advertising efforts and solid demand. RBI's bi-monthly survey reported that consumer confidence in India improved with respect to the current as well as future expectations. The current situation index increased to 83.50 points in November from 80.60 points in September 2022, while the future expectation index climbed to 114.9 in November to 113 in September. According to CMIE data, the unemployment rate increased to 8.3% in December from 8% in November, despite the absolute employment level reaching 410 million, the highest since the pre-pandemic month of January 2020, and employment rate improving to 37.1% in December from 36.4% in November. The urban-rural divergence continued, with the urban unemployment rate increasing to 10%, while the rural unemployment fell marginally from 7.6% in November to 7.4% in December. At the end of November, government's total receipts amounted to 14.64 lakh crore rupees, which is 64.1% of the budget estimate, and the total expenditure stood at 24.42 lakh crore rupees, which is 61.9% of the budget estimate. The fiscal deficit at 58.9% of the budget target was much ahead of the previous year's 46.2% in this period. Monthly GST revenues exceeded rupees 1.4 lakh crores for 10 straight months, with the gross GST revenue for December 2022 being rupees 1.49 lakh crores, a 15% year-on-year growth. The total revenue of centre and the states after regular settlements in the month of December 2022 is rupees 63,380 crores for CGST and rupees 64,451 crores for the SGST. Now we come to bank credit. On a year-on-year basis, total bank credit grew by 17.2%. While food credit contracted by 36%, non-food bank credit registered an expansion of 17.6% in November 2022 as compared with 7.1% a year ago. Personal loans grew by 19.7% on a year-on-year basis in November 2022, largely driven by housing and vehicle loans. Credit to all sectors expanded, be it agriculture, industry, or services. Next, we come to markets, that is Sensex and Nifty. Sensex gained 4.44% in local currency terms in 2022 and emerged as the best performing index in Asia and second highest globally. Nifty's annual gains also crossed the 4% mark. The credit for this relative outperformance goes largely to domestic investors whose steady investments cushioned the volatility caused by FIIs. With 7,828 million transactions in December, UPI transactions reached their highest monthly value for the calendar year 2022 at Rs 12.82 lakh crores. Power consumption also showed a positive trend. As per government data, India's power consumption reached 121.19 billion units in December 2022, a growth of 11% as compared to 2021. The growth in these high-frequency indicators indicates sustained momentum in India's growing economic activity. According to S&P Global's economic predictions for the coming year, a slowdown is expected in the US, Europe, and China. However, Asia-Pacific is likely to remain resilient. The easing of global inflationary pressures is also expected. This is likely to slow down the rate at which the Fed has been hiking its policy rates and provide relief to currencies around the world which have been depreciating in the face of an aggressive dollar. India, through its economic resilience in 2022, has presented itself as a bright spot in the world economic arena and is likely to benefit from it in the coming year. The upcoming budget will also play an important role in determining the road ahead. What are some of your expectations from the next budget? Do let us know in the comments below. If you enjoyed our video, do like and share it and subscribe to our channel for more such content. We will see you soon with a new video. Thank you for watching.